Hi guys, okay, so quick update on Nasdaq and the major US markets. So going to spend a good 20 minutes on this, a little bit different to the Bitcoin that I usually do. So just to let you know, first of all, doing a 60% off sale. I'm going to be charging VAT from the 1st of August. So discount code is no VAT, that's NOVAT, that's 60% off for all the webinars, educational material, the PDFs, everything's on sale for 60% off. So just have a look, click on the link in the description below. And if you want to join the secret Facebook group, I've changed it up a little bit because the markets are about to get very, very volatile. We're now on a regular basis going through the Dow Jones, S&P, Nasdaq, gold, silver, oil, major forex pairs. So last week we had some really good trades on the New Zealand dollar, cable, euro, and today we're going to discuss the Nasdaq. We also regularly discuss the bond market, which is basically going to be the cause of this major recession, which we're going to have very, very soon in relative terms anyway. So if you guys are interested, just go on the website, sign me up, go through to the PayPal payment page. Once I get your payment, I'll send you the link to the secret group. You can pay in crypto, but you've got to pay a month up front, and if you want to pay in crypto, you got to email me first. So my email is financialfreedom007@outlook.com. So once again, just have a look if you guys are interested. And once again, from the 1st of August, I will be increasing prices. So anyone who joins before then, you will be on the lower rate. So let's just discuss this first. So this was actually a comment on one of my tweets today. I thought it was a very interesting graph. I am aware of this, but I wasn't aware of the historical precedent. So this is the Shiller P/E index, or price over earnings, which is what major hedge funds, investors use to get a valuation of the markets. As you can see, the peak was 44, which was in 1999. We're nowhere near there yet, but we are pushing on highs. Or we've pushed past highs from Black Tuesday, which was October, I believe it was the 2nd or 3rd, 1929, and we know what happened there, 80% correction in the Dow. Now, so other than this, freak anomaly up here, it's pretty much the highest P/E index that we've ever had in the last 100 and 30 years of the stock market. And, I can't really put an Elliott wave count on this, but I suppose you could get 5 waves into here. That could be a 3-wave correction. And now we're trying to push on. So this is something interesting to watch. We're not close to this big stock market sell-off just yet. I think we're at least 18 months away, but things will slowly start crumbling away, especially in Europe. I think that's where the biggest risk is, and eventually that's going to spread over to the US market. So US markets will still remain the safe haven, and that's probably going to push those prices towards 40,000 on the Dow, but we'll go into that in a minute. But that's just something interesting to have a look at, how we're now pushing on valuations here which are very, very elevated, and we know when we get an extreme we usually get a big dump. So something very, very intriguing, but we're still another 20% away or 33% away from 44, but there's nothing to say that we won't get there, and quite possibly we will get there in the next month or so. So we'll go on to the Nasdaq in a minute. Actually, let me just cover the Dow Jones. So where is the Dow Jones? Let me just cover the Dow Jones. So the DJI is the Dow Industrial Average, the futures contract. So first of all, I put out a tweet to say that we've got a fractal formation of 1929. This might not be the case, but it looks fairly accurate to me. So this sort of move from 1913, where the Federal Reserve was formed, around the time at the end of the Great War, we got this sort of expanded flat formation, and that's very, very similar, as far as I'm concerned, to this expanded flat that we've had from the tech boom to the '02 lows to the GFC highs to the GFC lows. So that is the fractal of this, yeah. So, and then after the Great War, we've had the Roaring '20s where everything was great, and then we've had this massive parabolic rise up to October 1929. So that pretty much lasted around 8 or 9 years, and that's very similar to what we're having now. Obviously, if we go past if you were to say it's an exact fractal, this stock market should have collapsed about a year ago. But obviously we're kind of past 2017. But if you were to work it out, we're kind of up here. We're kind of in a 1927-ish sort of time. So I expect the Dow to start rolling over pretty soon, either to make a new high then roll over, or to get a rollover to at least 22,500, 20,000, followed by which point it's going to go near vertical, very similar to what Bitcoin did just before December the 17th. So this kind of unhealthy movement is only going to end up in one way. So that's where we are in the fractal pattern. We're about 24 months away, and then obviously we've got this 80% correction in the Dow. So because this movement towards 40,000 is going to be the end of a wave 5, and I can show you that. So from the 1932 lows, that's a wave 1, that's a wave 2, that's a wave 3, that's a wave 4, that's a 1, 2, 3, 4 parabolic 5. So as a minimum in Elliott wave theory, you would go to at least wave 2 of the extension. So that basically gets you to at least 2355 on the Dow, and obviously there's very strong support at 1,000 on the Dow. And even if you were to go down 85%, you're getting at least 3,000-4,000 on the Dow. So the point being, we're going to have a moment in the very near future in relative terms where we break the lows off the 08 low. So we're going to end up breaking 6,500. And Bitcoin's doing something very, very similar, where eventually it's going to end up at wave 2 of the extension, so somewhere between 2,500 and 4,000, which I called 8 months ago now. So Elliott wave does allow you to predict things, what I believe, to a higher degree of accuracy. So that's just the fractal nature of where I think we are. So I'm not going to cover the S&P. I'm going to cover more the Nasdaq. So it's the Nasdaq which is concerning me the most. And I'll go as far as to say the FANG stocks have been holding up the world economy. But there you go. They do make up so much of everyone's investment. So you can look at this in so many ways. Let me just take off all of these drawings. Let's just neaten it up. So obviously the Nasdaq is in an uptrend, but all uptrends do come to an end, and the whole trick is, or the whole point of doing this, is to predict when that uptrend is likely to come to an end. So let me just take off a load of this nonsense here. So very clearly we can see here in the start of 2018 we had some sort of wave 4. This is very clearly a wave 4 of some sort. It's a running flat, and you can see on the RSI we got hidden bullish divergence, right? So price made a higher low, RSI made a lower low. So if you take that to be some sort of wave 4, we have basically been forming since the lows in March this wave 5. And if you were to break down this wave 5, what concerns me is we're in wave 5 off that wave 5. Now there's different theories really as to when wave 5 is going to top. One theory, I know someone who just says, well, as soon as wave 5 makes a new high above the top of wave 3, I'm going to go short. Because there's so much weakness, and wave 5s are typically speculative. They're typically led by retail traders who are following the herd. So what we've had is some sort of, I've bought 20k crypto, I've sold at 10k, I need to make my money back, let me go into the Nasdaq. That's the kind of theory that we've had. So that's what I believe has sort of happened. So there is some theory to be said, the minute wave 5 breaks wave 3, you can just short it then, because then we're talking about such minor degrees of wave 5, it's going to roll over. Now I do believe myself the Nasdaq might end up going a little bit higher, but honestly, in the grand scheme of things, from a risk reward perspective, there's only 1.5% on the upside as far as I'm concerned, and there's over 15% on the downside. So there's probably a lot of people even right now building shorts, and they're of the opinion, look, if it goes higher, I'll just add to my shorts. If it goes lower, then I'm confirmed right. What would really concern me is a breakdown of this rising channel line from, April again, June. So that would really concern me, and that is also the pivot high from here. So 71.78, a breakdown of this level would really concern me. I think the Nasdaq could easily move down, to these sort of levels, to at least here. That would be minimum target, frankly. Personally, I think it's going to correct even more than that, but I think that is probably a lot of traders are looking at that thinking that's not a bad little trade, that to the downside. I don't think Netflix is going to make a new high, frankly. I know other commentators, I've not properly looked at the chart. My target was 413 purely from a statistical chart perspective, and that chart PDF, once again, you can find it here. Where is it? That one there. So it was an ascending triangle on Netflix. So these chart patterns are very important. But anyway, let's get off that. So but we'll go into the FANG stocks actually today. So I think as a minimum target, I'm going to be targeting here. So I think all the FANG stocks need a healthy 25%, 30% correction, after which point we'll probably get another move up in the Nasdaq. So quite possibly all of this is just a wave 3. We're going to get a larger degree wave 4, and then we're going to get this final sort of vertical blow off top across the board to probably 8,000-9,000. But as far as I'm concerned, why would you want to just assume that? Right now the short-term trend is probably going to be down, so for me it's a risky investment holding it here. I don't believe in this, in 2 years Bitcoin's going to be 50,000, so I'm not going to sell at 20,000. That doesn't make any sense to me. If the trend is going to be down for the next 6 months or so, you should plan at least 6 months or a year down the line, unless you're extremely long-term investor. But I don't really believe in that. If you know the next 6 months or a year are going to be down, you should take steps to account for that. But anyway, so let's just go into the count. So yeah, I mean, there is an argument in Elliott wave theory that once your wave 5 on a proper small degree level breaks your wave 3, you can trap your shorts. And what concerns me really is here, well, first of all, I don't have the commercial data here, but the commercials have dropped by 26% since the last COT report. So that's the first thing. You've also got this slanted head and shoulders here, and we know fives or fives or fives or fives, they're extremely lower degree, so they could easily truncate here. I don't like it myself. I think it might still go higher, but either way, we've topped out on Friday, or we're very, very close, or we can get some sort of ending diagonal wedge pattern, some sort of wedgy sort of nature like this, and that's a very good short. Typically terminal waves end in this ending diagonal sequence, but really the point of no return that I will call extremely bearish on Nasdaq is here. If 7100 breaks, then we're going to get quite a violent move down, because this is all retail money. None of this is professional money. They've kept FANG in the CNBC headlines the last 3 or 4 months or so, and I know a lot of people who have bought into FANG since April. I've been warning them, but you can see here that is just retail money. None of that is professional money, and the only time you see a big volume candle has actually been a big red candle, which is obviously professional investors getting the hell out of there. So and that kind of thing would cause extreme divergence on the OBV, which is a marker of net sellers, and also on the RSI. So the point being, we're in a 5 off a 5 of probably a larger degree 5. I mean, almost certainly this wave, if you account it from here, from 2016, I won't go any further back than that, just for clarity's sake, but if you count all that as a 1, 2, that's all a 3, this is all a 4, that's a wave 5. So if I just make that a little bit larger to make everyone, I mean, it's not the sub-millennium, but just for, let me just make it around, that's better. So, if you look at it, we're in 5 off 5 off 5. I mean, technically, it's off a massive wave 3 since 2010, but you can see how this target doesn't even cut it, because as a minimum, we're going to get some sort of retracements. Let's just figure out where the next, so let's just say it's going to hit this 7500, right? Let's say it's going to go a little bit higher. well, you can see the bottom of this base is here and the bottom of this base is 6151, so that would be another target. So as a minimum we would get a move down there. You know, I'm not going to plot the fibs from 2010, but you get the point. We're going to be in for at least a, you know, healthy 20-30% correction across the board. And then, you know, I guess you could hit the 51, the 50, the 60.8. I mean, really, the big resistance is here, but that seems a bit too much of a sell-off if we still want to get this blow off top. I don't think this is the end. I think there is still some higher movement. I think we're about 18 months away from something quite nasty, like a 1929 moment, but we're not quite there yet. So let's just play it safe and say 6151. But either way, if you're trading that, a lot of people will be looking at the Nasdaq very carefully, especially now that we go into August. So the big hedge fund managers are back from the Hamptons and the Riviera, so they can authorize larger sell orders now. So that's my take on the Nasdaq. I don't think this target will get hit, or this target. These are just Fibonacci targets which I've worked out in the event of an extensive wave 5, but as you can see, it's already tailing off, and you know, the commercials have already legged it. You know, there's 26% decline in the commercials the last week, so that is quite a significant number, really. It's not at an extreme level, but it's enough of a change to make me think, wait a minute, they're getting the hell out of here. So if I just take off magnet mode, take off this, you can also look at this from a volume perspective. So this candle right here, let me use the Rastani arrow. You gotta love Rastani. Okay, I'm using the Rastani arrow there. Oh, it's gone off. Okay, but you get the point. This candle here, that's a no demand candle, yeah? So it's got volume lower than the previous two candles. So this volume was what? What was the volume? 362. This volume was 365. That was 372. So it's a no demand candle is a candle which has volume lower than the previous two. It goes up initially, takes out all the buy stops, then it finishes in the lower half of the candle, and it usually finishes as a bit of a doji. It doesn't have to be red, it can be green, so it can finish higher, but usually that's what you get. And that candle right there that we got on the 18th, that is showing no demand for higher prices. Now that's not confirmed until this candle, which is now closing underneath the low of the no demand candle. So that in itself is a bearish setup, and obviously that's been followed by a hammer gravestone doji. So there's not a good setup here at all. Now it doesn't mean we can't go higher, but I'm just signifying that the top is very, very close, and obviously we're getting all kinds of doji formation here. So if we do end up moving higher towards this 7500 target, it's only going to be another 1%. So probably a lot of shorts are going to be all over this, you know, because that kind of trading move is why people, you know, trade. So they want to make that kind of move on the downside. But you can clearly see here, even with the eye, you know, 1 2 1 2 3 4 5 3 4, and it's obviously in some sort of fifth wave, of which we've had a 1 and a 2 and probably a 3 and a 4, and now we're just merging into some sort of truncated 5. So you can clearly see the Nasdaq is becoming very, very toppy. Now let's just quickly run through. So Netflix, my target was 413, and that was this statistical triangle breakout here. So you can see this ascending triangle. Once again, I cover this on my top 10 chart patterns. It's that one there. So I go through everything, so you can see here how to work it out, how much from the distance, the statistical measuring, the breakout time, everything. So it's worked out perfectly. This target added onto here, you've got a double top, almost head and shoulders pattern, and now it's come down in quite large volume. You know, that kind of volume takes a while to reverse. So I know other commentators are saying it might go higher, which is possible. I've not completely discounted that, but maybe Netflix has been the first to show its hand. So, it's looking a bit dicey for me. I think Twitter, my target was 50, so we mentioned this in the group. It looks as though it's gone up, it's truncated, hit 50, now it's going to start rolling over. I can see Tesla rolling over pretty soon as well. Tesla's high was all the way back in September, so 388. I don't think you're going to see 388 for a long time on Tesla. That all looks like a Wyckoff distribution pattern to me. You can see the volume now picking up, the real red sell volume really picking up here. Google has got earnings, I believe, on Tuesday night. And my target has always been 1260, which once again is the statistical breakout from the triangle. So you don't always have to use Elliott and Fibs, even though most of the time I do for longer term time frames. If you see a pattern and you know what you're looking for, i.e. everything that I've measured here, and these are the major 10 patterns, you don't really need more than this. You can easily work out from a mathematical perspective where there's a high probability of that trade finishing. So I think Google is very, very close to being done. I mean, I think you'd be silly to be long here. Let me just take all this mess off. So you can see on Google that this pink line has been a rising line on Google ever since, well, 2016 really, and you can see the feeble attempt of this wave 5. Once again, wave 5s, they're not very pretty. There's declining volume, they're very speculative. Look how overlapping this is, but one could easily decipher that as a 1 2, 1 2 3 4 5 3 4. Wave 4 hasn't crossed wave 1, so you can see here very clearly that we're in wave 5 and we're probably made 1 2 3 4 5. So we're getting so close here to topping out on Google. I'm not sure if it'll hit 1260. Maybe it'll spike up on the earnings after hour, then it'll come down, but we're getting very close. Apple, I'm not even going to bother going over. This has been in a massive Wyckoff distribution phase for the last year and a half, so they've been quietly selling out of Apple for a very, very long time. It takes a long time to sell Apple because it's the world's most it's the most popular investment investment stock that that's around the world, so everyone's in it. So it takes a while for the professionals to sell to the herd, but I'm not convinced Apple has much more upside. Maybe 206, but that's very risky. And then obviously Facebook, since these lows here, you can see once again 1 2 1 2 3 4 5 3 4, and it's also in its fifth wave, and my highest target on Netflix is now being hit. So all of these targets have been hit. This one's been hit 206, and 212 is so close. And then you've also got this line which is going to become an issue. So this rising line, here, the top line is parallel to the bottom line, and the bottom line is connecting the lows really. Sorry, wait a minute. It's parallel to this bottom line here. So what I've done, I've pressed right click and clone, and I've cloned it, and you can see that line is coming into effect very, very soon. Maybe it'll hit 220 or something, but it's getting very, very close. So a lot of shorts are going to be all over that. And once again, you can see there's poor volume here. This is purely retail money who have unfortunately lost money on Bitcoin. They've not known where to go, and they've been advised to go into FANG. And I suppose they've not done well. They probably would have got in here, so that doesn't really count. They've only made what, maybe 10% on that. So there's divergence here. OBV's rolling over. Obviously, I don't have the COT report for it. So you can see a big sell-off coming here very, very soon. And so that's it really. So that's my take on the Nasdaq. VIX is just doing its thing. It's nice and low, which is fine. But the DJT, this from Dow theory, this historically has sold off first. Obviously, it actually looks like quite a bullish little setup there, which isn't. That's not a bad little candle actually. How high this can go, I'm not too sure. But I'm actually quite impressed with that candle. But it needs to have follow through here. The most recent high was at 131. So let's see how far the Dow can actually get. I mean, if the Dow does make new highs, it's going to make very, very slight new highs. The count doesn't look too good, does it? I mean, all that could just be an ABC expanded flat or some sort of running flat coming down. So if the Dow does make new highs, it will be very, very marginal new highs. And then on the ES1, you know, there is a count which takes us to 3,000. There's a lot of fib resistance here, but that doesn't mean that it has to go there. If the Nasdaq sells off and there's problems in Germany with their bond market and stuff, and maybe even Bitcoin start selling off in the next couple of weeks towards the lower targets which I've mentioned, then you know, S&P doesn't have to make new highs. Elliott wave doesn't, you know, it doesn't have to make new highs. It could easily just be some weird ending diagonal truncated wave that just truncates here. So there's nothing to say that it does get here, but if it does, then I'll be surprised if it makes it above 3,000 before a big sell-off. So that's what I'm looking at, and that's my analysis. And it's the Nasdaq which concerns me the most, because in 2008 the Nasdaq started to move a good 6 months before the S&P did. So it would make sense that towards the top it would sell off first. So it's almost as if, you know, Bitcoin has led the way, Nasdaq is going to follow, and then the S&P and the Dow are going to follow. So let's see what happens. Those are my thoughts. I think FANG is very elevated, and I think a lot of people are going to get trapped there. So it just takes one tweet by Mr. Trump or one bad headline on CNBC to activate the panic selling, and then we're going to get some movement to the downside. But as I said at the start, I still feel we're not quite done yet with this market. I think the market still inevitably, after a correction, is going to go higher. And this very, very interesting chart. So thank you for the guy who tweeted this to me. I can see this POVE, the way things are going, and what I'm projecting on the Dow 40,000. This could easily hit the sort of 40, maybe even double top and hit 44. I think that is possible. Sounds ridiculous, but that is possible, after which point we're going to get quite a hefty correction. So that's my take on the Nasdaq. Good luck to you guys, whatever you're trading, and follow me on Twitter if you're not already. It's Nazir Jones 007. And if you guys want to join the group, just have a look on the Shopify store. I do take Bitcoin payments and Ether payments as well, so if that's your thing, you can have a look, and I'll chat to you guys soon.